If people are thinking that Byju's is going down, no chance. No chance. Companies fail not because of external reasons. Companies fail because of internal reasons. Love is private, hate is public. I am not just the largest shareholder, I am the largest investor in the company. You don't need 10 million to start a company. You need 3 people and an idea to start. Even when you are sleeping, you will be able to tell that if you do good, we'll end up doing well. If you do well, we'll end up doing good. You can force students to attend the class, but you can't force them to pay attention to what you teach. I've been doing it for 18 years. Aspiration is to do it for at least 30 more years.
That was Byju Raveendran, a man whose defiance can no longer hide his defeat, as his $22 billion edtech empire probably nears endgame. Byju's was once synonymous with the rise of the huge online learning industry. Now, antagonized investors fight for its control. Creditors are in court demanding their dues. The Enforcement Directorate is at its heels. It's living a month-on-month existence funded by little else than Raveendran's own money. And above all is the huge debt pile which was bound to be its undoing from the very start. The present is the bleakest it has ever been for Byju's. The future? Well, there may not be one. In this episode, we try to chronicle the downfall of one of India's wealthiest unicorns and the man behind it. A genius math and physics teacher turned wildly successful entrepreneur who perhaps forgot some of the most critical lessons of building a credible business. It's the 27th of February. I'm your host Anirban Chowdhury. This is the Morning Brief from the Economic Times. Here's Samidha Sharma, ET's editor for emerging businesses, the last word on startups in the paper.
I remember meeting Byju Raveendran first time in 2014 in one of his early offices in Bangalore. Around this time, Peak 15, which was formerly Sequoia Capital India, had invested in Byju's. At that point, Byju Raveendran was obviously known to the wider world as, this acclaimed sort of professor and had a cult following among his students. So first impression was, a founder who had just been sort of funded by Sequoia, one of the most marquee sort of VC investors. And he was trying to pivot from being an organization which was largely sort of around him and his, cult to being an edtech company.
Did he strike you as much of an entrepreneur in terms of the business side of it, a businessman? Did he strike you as that then?
He definitely was a great salesperson. He proved it over the next few years in the way Byju sort of from what it was in 2014 had become by the time, they did their last, round, which was at 22 billion valuation. And like I said, he always came across this, solo aggressive founder, and it sort of panned out over the next 5 to 7 years, the way he built the company.
The other side of his personality is that, so what we can see then, he maintains a lot of his small town attributes.
And here's Manu Toms, executive editor of ET Prime, who's written extensively on the company.
When we attempted that profile of Byju's, we have not really reached out to him. Our approach was to speak to people around him, people who know him, people from his past, the people in his neighborhood, all that kind of stuff. So, and then I took a trip to Kannur and I went to his village and I went near his house, and I walked around. I spoke to people. Just before the article was about to release, we reached out to Byju. And then he came to know that, so I had in fact, visited his place, etc. So then he asked me, having gone all the way there, it was so sad that you didn't go and meet my dad and had a cup of chai, So
Raveendran's father was a maths teacher while his mother taught physics. So he did start very close to his roots. Startup legend has it that Raveendran cleared the CAT entrance exam twice, in the 100th percentile each time. But both times, he didn't respond to calls from various IIMs, but instead went back to working for the shipping company he was with. But he had taken the exam while helping his friends prepare for it. This sparked an idea in him. He started his own test prep classes. They became wildly popular. Soon, he was teaching entire stadiums full of students. In 2014, he and his wife Divya launched the Byju's app. As smartphones reached more and more hands in India, Byju's became huge.
I spoke to quite a number of students who became his co-founding team, etc. So they have been from the very start, they were so mesmerized by his classes. So I think he had that head start. And then after he started his company, the Byju's classes, way back in 2010, I believe. So one of the earlier employees were telling us, so from the day one, he was making money. So that way, he always, he had a lead. So even pre-pandemic, he was, I think, 5 billion valued that point in time. And all the other edtechs were, below 1 billion at that point in time.
But the best was yet to come. When did it come?
Definitely around the COVID years, right? I mean, he raised tons of capital. His valuation, was literally skyrocketing, right? From 5, 6, 8 billion to, 14, 15, 22 billion. So I think that spike was obviously took note of Byju's, and that led to a bunch of acquisitions, starting from obviously White Hat Junior, Great Learning, Topper, a bunch of things he did in the US, and obviously not to forget Akash. So the way it was being seen was that, he was raising capital and acquiring these assets. And all of this is sort of seeming like a bunch of different assets which are being put together to make sense of that valuation.
Here's Nirgunan Tiruchelvam, Head of Consumer and Internet at Alethea Capital.
You need to look at the enthusiasm with which people viewed Byju with the situation in the world. If you go back to 2020, we had mass lockdowns in many countries, and we had Byju, a company that had generated a user base of 100 million people, a tenth of whom were paying users. There was a belief that edtech and online learning was the way ahead and it could have exponential growth. People confused the short-term issues that we had during the pandemic for a long-term phenomenon. Education has been a non-scalable service. The economies of scale that you see in factory production and in other service businesses do not apply to education. Anybody that was going to challenge that was viewed favorably by the stock market investors as well as private investors.
Between 2015 and 2021, Byju's raised $5 billion via 28 rounds of funding. Its valuation quadrupled. Also, between 2017 and 2021, the company made 6 acquisitions for $2.5 billion. That's more than 20,000 crore rupees. Clearly, it was expanding too fast, piling on debt as it did so. Its financial health could not keep up. In fact, long before its financial problems were revealed, the internet had been full of videos of Byju's disgruntled employees.
सर रिजाइन कहाँ से आ जाता है सर बात रिजाइन यहीं से आ जाता है नहीं हो रहा तो मत करो काम 2 हफ्ते से जीरो में बैठे हुए हो यार
नहीं सर दिस इज एंड हमें 12 मंथ्स इंसेंटिव नहीं मिला है सर क्या हुआ सर ले हम हो रहे हैं हमें एफआरएफ में क्या मिलता है 2000 रुपीस
एक मेल आया जिसमें सडन टर्मिनेशन का मेल था वो ये चाह रहे हैं कि हम फोर्सफुल रेजिग्नेशन दे दें बायजू सर आपने टाउन हॉल में बोला था आज मैं आपको बोल रही हूँ मेरी हेल्प कीजिए सिर्फ मेरे पैसे दिलवा दीजिए बस और मुझे कुछ नहीं चाहिए.
There were accusations of mis-selling too. In December 2022, the National Commission for Protection of Child Rights summoned Raveendran to appear before it over allegations that it was indulging in malpractices to lure parents and children to buy its courses. So, there was widespread criticism of its operations. Byju's was quick to shut them down. For instance, angel investor Anirban Malpani's LinkedIn account was suspended after he blatantly criticized Byju's practices. The financial rot was first revealed in September 2022 when the company's financial results were declared after an 18-month delay. It was a loss of over 4,500 crore rupees.
I think that's one problem Byju always had. So he gives a very, very optimistic picture of the business. I think maybe that's what they are supposed to do. I don't know. But during the pandemic, I have always seen him. He always maintained, until this particular result, FY21, that came in September 2022, after 18 months delay. So until that point in time, he always maintained that the company is fast growing and profit making. And I think at one point in time, he said he's on to FY21 revenue. He said 1 billion revenue and 100 million profit. So coming from a founder, so people would actually think, okay, this is happening. But that results, but that, and he made public statements, so, and then you saw that when the results came after 18 months, it was nowhere close to that, and the losses were humongous, and the facade of profitability crumbled there. And maybe I think that we can probably call it as a time when things started reversing.
The breakneck speed of acquisition was Byju's first mistake. At least 2 of those purchases backfired badly. In fact, half of Byju's 8,500 crore loss in FY22 was because of White Hat Junior and Osmo, 2 companies that it had acquired. Here's Thiruchelvam again.
There is the concept of a roll-up. You might remember that roll-ups were a concern in the US stock market some years ago, which is that a weak operating performance, a company engages in a series of acquisitions, and it becomes very difficult for investors to distinguish between the operating performance that the company would have anyway generated and the performance that is acquired through acquisitions. Byju made very serious, very expensive or very hefty acquisitions. It could be viewed by many investors as corporate behavior that looks like roll-ups.
The delay in announcing results and public denial of its losses before they were revealed Byju's second mistakes. That was not all. In November 2021, Byju's raised an overseas term loan of $1.2 billion to drive its expansion. At the time, interest rates were low, but then they rose and Byju's fortunes fell. Its total liabilities ballooned to over 17,000 crore rupees, of which overseas debt accounted for over 8,000 crore. The companies missed an interest payment on that $1.2 billion term loan, took its lenders to court and lost. The lenders took control of its company called Alpha, but Raveendran had already moved the money from there. The lenders haven't got their money back. The conflict goes on, and the term loan continues to haunt the company. Perhaps Raveendran's last and biggest mistake was alienating his investors.
So there was always been this challenge where the investors faced, where they are not getting enough information that they wanted, etc. So while that being the case, for a very long time, they decided to string along. If you look at, so because the company was growing, the investments were coming, the large investors were coming, and the valuation is growing very big. And the company kept acquiring other companies and becoming a net-tech behemoth, so to say. Byju always been accused of, and to a large extent justifiably so, he's being accused of creating this fear of missing out, this FOMO in parents and kids, and that's how so he got large user base. I think the VCs had bigger FOMO. They fell over each other to putting money in his venture at whatever price and without any conditions.
And it came to bite them real bad. The investors finally lost patience. On the evening of June 23rd last year, 3 big investors, Peak 15 Partners, which was earlier Sequoia Capital, Prosus, and Chan Zuckerberg Initiative, collectively resigned from the company's board. Here's Prosus's statement at that time.
Byju's grew considerably since our first investment in 2018, but over time, its reporting and governance structures did not evolve sufficiently for a company of that scale. Despite repeated efforts from our director, executive leadership at Byju's regularly disregarded advice and recommendations relating to strategic, operational, legal, and corporate governance matters. The decision for our director to step down from the Byju's board was taken after it became clear that he was unable to fulfill his fiduciary duty to serve the long-term interests of the company and its stakeholders.
It was an extremely high-profile shareholder walkout, even a revolt. You could argue that the investors should have seen this coming, and they should have asked for more controls in the company much before. On both counts, you'd be right.
The practical problem is that what shareholder right have you secured when you signed up for this investment? As far as I understand, the investors would need more than 10% of the shareholding to have a board seat. At the moment, no external investors have 10% stake. And also the other fact is that, the whole company is built around the founder. So he is larger than life as far as this company is concerned. He has got historically held the highest stake. Even at this moment, he has 23 to 26% kind of stake. And probably this is the only unicorn at this level, which is named after the founder himself, So therefore, practically, it's not very easy, even if you want to push back. So that was the situation as far as the investors are concerned. But from Byju's point of view, the investors came back at him. They hit him at his most vulnerable moment. And that impacted his fundraising, that impacted his efforts to put things in order when things have gone wrong. And they, instead of helping him at that point in time, they rather created more troubles for him. That's his point of view.
Over the last few months, the Byju story has boiled down to a heated battle between Raveendran and his investors for the company's control. He wants more funding. They want to have more say in the workings of the company. Meanwhile, Byju's itself is in dire straits. Raveendran has been pumping in his own money to keep the company afloat. He claims that he and his wife have put in $1.1 billion into it in the last 2 years. He has had to pledge his house to pay salaries. The company's Indian creditors went to India's bankruptcy court NCLT. Now it faces a payments crisis of $120 million and a cash burn of $6 million. Pushed to a corner by his investors thus, earlier this month, Raveendran rolled what was probably his last dice. He initiated a $200 million rights issue valuing the company at 1,000th of its previous valuation. He did this without informing investors. How? Because according to Section 62 of the Companies Act 2013, a company can go for a rights issue without shareholder approval, and the company's board has the discretion in determining the price of the securities. Remember, Byju's board has only Raveendran and his family now. The investors were faced with a Hobson's choice: pool in their share in the $200 million or lose the $5 billion they have invested in the company.
If the situation goes out of control, the two investors, who would bear the brunt of it would be Prosus and General Atlantic. Prosus put 500 million and General Atlantic put about 400 million. So they together have put 900 million. So just 100 million short of $1 billion. And they haven't taken a penny out of it, So that could be a huge value erosion for them. And as far as Peak 15 is concerned, so they came in early. They are the earliest, barring Iron Capital, they are the earliest institutional investor. So they put in 40 million. So for their 40 million, they made 10x gains already. So they have taken out 400 million around, and then they're still holding 7%. So their gains could have been much higher, if things somehow turn into positive. And the other early investor, Lightspeed, so they have made 3x gains and still sitting on some around 2% kind of a stake. So I think, as I said, it's Precipice and Gentle Atlantic who would suffer the most.
So they called for an extraordinary general meeting to oust Raveendran. Raveendran went to court trying to invalidate the meeting, citing the Articles of Association and the shareholders' agreement. But the meeting happened anyway, and they called for his ouster. Just on Wednesday, Raveendran wrote a letter to his employees, the ones that remain anyway after several thousands were laid off. He assured them that he's still CEO.
The results have, they conducted this EGM. We are getting to hear two contradicting outcomes. One says that 60% of the shareholders, I think those have the 60% of the voting right. They have voted in favor of the resolutions to remove Byju Raveendran and his family from the company. And the other is that actually it's not 60%, it aggregates to just 47%. It fell short of, majority. And therefore, even if we consider it was a valid exercise, it has actually failed to pass the resolution. And investors has moved the Bangalore NCLT. Now the ball is in NCLT's court. So they want to stop Byju from conducting this rights issue. So if NCLT doesn't stop him, Byju still has a fighting chance of retaining control and raising money and continuing to run the company. Of course, this will run into a lot of legal issues, and the question is whether the company can afford to have that level of a legal fight at this moment. So 20,000 employees and $5 billion of investment is at stake.
But is that all in the list of Byju's problems? No. India's financial cops, the Enforcement Directorate officials, are after it too. Here's my colleague and ET's financial crime sleuth, Rashmi Rajput.
So in November last year, the Enforcement Directorate issued a show cause notice against Byju's parent, which is Think and Learn, and its founder, Byju Raveendran, for alleged FEMA violation, which is Foreign Exchange Management Act violations, amounting to 9,362 crore rupees. Now, the Enforcement Directorate in its show cause notice had said that the company had failed to follow the FEMA norms. Now, this included that the company failed to file documents relating to foreign direct investment inflows. It failed to file documents relating to remittance made by the company outside India, and also that they haven't allotted shares against the FDI received. The agency also says that since Mr. Raveendran was responsible for the conduct of the business of the company and he was the managing director, he appears to be guilty of the FEMA violations. Now, during the course of the probe, the ED had sought documents from the company from April 2020 to January 2023. And the biggest irregularity under FEMA, it found that the company had failed to put up its annual performance report by the due date for rupees 8,272 crores of overseas direct investment made by it between 2020 and 2023. The company on its part claimed that these are all technical irregularities, technical in nature, and that they are making the case before the Enforcement Directorate.
And the latest development?
Now, post that, what has happened, Anirban, is that the ED went ahead and issued something called as the Lookout Circular, or LOC on intimation, which basically means that whenever somebody who's of interest to an agency, that person travels outside India, the Bureau of Immigration tells the agency that this person is traveling out. Now, that is the first level of LOC, which is LOC on intimation. That was issued post the issuance of the SCN. Now, what we learned that the ED has upgraded this LOC, and there is an LOC of detention, which basically means that whenever he is on any of the ports in India, the Enforcement Directorate would be communicated, and then there's a possibility that he has to go and visit the ED's office, and the ED can question him on the FEMA case. So this is where it stands. Now, the SCN has been issued. Now, final order on that SCN is awaited.
At any point, did Raveendran try to course correct?
I guess over the past almost 2 years, he has been promising a lot of cost correction to his, investors, his shareholders, his board. But a lot of those things didn't happen, including the fact that, there was discussion even 6 months back about getting a new CEO in place. So course correction, I think he has been wanting to, but it's so one thing has actually led to another thing going wrong.
See, last 6-8 months, he has been genuinely trying a course correction. Some of the things that they have always been accused of was this aggressive sales and this huge sales force, which was like trying to. I think they did some huge reorganization. And there are other people also got seriously involved in the business. It's not a one-man show anymore. He brought in his own student turned senior executive colleague, Arjun Mohan, to run a large part of the business. And also, I think he got a strong advisory team, including Mohandas Pai and Rajneesh Kumar and others. He was seriously trying some course correction in the past few months. But we don't know, maybe investors are finding it too little and too late. And that's why they are not ready to budge.
And that's how things stand now. Raveendran needs funds and he can't let go of control. The one silver lining in this story is an investment by white knight Ranjan Pai to pick up 40% in Byju's most valuable asset, Akash. That has rendered it debt-free, thereby ending Byju's long-standing problems with American creditor Davidson Kempner. Other than that, there's not much. Raveendran can hope the rights issue will help him stave off creditors and run the business for a while.
And during that time, maybe at a lower valuation, he can bring in an external investor, not that 22 billion valuation of 2021. But given that he got several assets, something like, say, Akash, and then Great Learning, if there isn't any pressing problem, he might probably be able to raise some money, even if it is at a much lower valuation, and that would help him bring the company back to track.
Tiruchelvam tells me that there is this pattern to edtech companies.
Well, edtech or education investing had some challenges from an accounting perspective and a corporate governance perspective. For one thing, the nature of education is that you provide the service over, say, 24 months or 36 months, but a lot of the payments are made upfront. There are examples, including examples here in this region, where education companies have been found to be very aggressive in their accounting, where they're booking some of the revenue a lot earlier than the earnings would suggest or accounting norms might dictate. So this is not the only education company or edtech company that has faced these challenges.
So what are the lessons really from this saga? Here's Samida again.
I think what has happened to Byju's is similar to what we are seeing happen in Paytm, but slightly different in the case because they are listed and it's more of a regulatory challenge there which has hit them. But when they went public, again, it was an issue of being highly valued and trying to catch up with your valuation. You were never actually supposed to be valued at this 20 billion, 21 billion, but you got there and now you have to do things to justify that valuation, else you take a knock. So it is sort of being on a treadmill and you can't stop. And a bunch of these companies are sort of product of that era when there was free money coming in, you were raising, you were growing, you were acquiring. So the lesson is pretty simple, Anirban. I mean, I think the new set of companies, and like I said, there are a lot of companies who have course corrected and, are aware that maybe 2 years back or 3 years back, they were valued at 5 billion. But today, if they go out, firstly, it's going to take them, a very long period to raise fresh capital. Even if they do, they will have to have very good set of numbers. They should be having a very clear path to profitability. And they should be fixing their unit economics very early on in their life cycle. And Byju's is not the only company from that era. I mean, I think 2 weeks back, I had written an opinion piece on, there are companies like Delivery, there are companies like Zomato, Policy Bazaar, all of which have gone public, have become profitable. There will be, a bunch of similar companies which are even in the private world, going to hit profitability. The big sort of headline here is that if you're going to grow, in a manner which you cannot sustain, at some point, you will have to reset. And the sooner you reset, the better it is for the company and, the shareholders.
From the perspective of people who are looking at emerging markets and for people who are well-wishers for the India investment story, one hopes that this whole episode is brought to a conclusion where some of the allegations are investigated and people do not mistake this specific example as a reason to look beyond emerging markets tech or beyond the phenomenal opportunity that we see in India.
That's it for today. You were listening to this episode on The Morning Brief. This episode was produced by Surohini Jain and Vinay Joshi, sound designed by Indranil Bhattacharjee. The Morning Brief drops on a listening platform of your choice every Tuesday, Thursday, and Friday. Keep listening and have a good week. All clips in this episode belong to their respective owners. Credits are mentioned in the description.